Chapter 9 Business Type Activities. Objectives of business type activities. Consideration of governmental activities and business activities. Making sure that these activities are accounted for as a business. Addressing several accounting issues that are unique to government enterprises. Set forth the purposes and assess the consequences of using internal service funds to account for goods and services provided by one government department to another. Showing how business type activities can be incorporated into government statements. New reporting model. GASB Statement Number 34 establishes a new reporting model. Governments may account for an activity in enterprise fund as long as it charges fees to external users for goods or services. Governments are required to account for an activity in an enterprise fund. The requirement to account for an activity in an enterprise fund must satisfy any of the following criteria. The activity is financed with revenue as opposed to general obligation debt. Laws or regulations require that the activity's costs of providing services, including capital costs, be recovered by fees and charges rather than general purpose taxes. And the pricing policies of the activity establishes fees and charges designed to recover its costs, such as depreciation or debt service. Golf course is financed by user fees but does not satisfy any of the other criteria, then the government may not be required to account for it in an enterprise fund. Proprietary funds. Reason for use of proprietary funds are to account for government entities' ongoing and continued operations and activities, enhances management activities in which goods or services are provided on a cost reimbursement basis or on a user charge basis, to compare benefits and costs of the business type activities of government utilities, comparisons with private enterprise. GASB Statement Number 20 Accounting and Financial Reporting for Proprietary Funds and other governmental entities that use proprietary fund accounting. Funds are said to be non-expendable or revolving. Non-expendable or revolving means that proprietary funds need to pay their own way. Focus on determining operating net income changes in net assets or cost recovery. Full accrual basis. Measurement focus on economic resources is consistent with GASB. Revenues are earned and expenses are incurred. Balance sheet recognition of both capital assets and long-term debt. Presentation is similar to profit entry statement of net position. 3 categories of net position proprietary funds. Net investments in capital assets, restricted net position, unrestricted net position, which is statement of revenues, expenses, and changes in fund net position, reconciles beginning and ending net assets. A statement of cash flows, which is prepared in conformity with GASB standards rather than FASB, includes cash and cash equivalents. Budgeting proprietary funds. Budgets of proprietary funds are different than governmental funds. They are driven by customer demand, requires planning and control. Governments are not required to obtain formal legislative approval for proprietary budgets. They do not have to present in the financial statements the budget versus actual. Budgeting proprietary funds should prepare several budgets to ensure on accountability. Cash budget to facilitate cash management and to have adequate cash on hand. Capital budget for fixed assets. Flexible budget indicating anticipated fixed and variable costs at different levels of output, which helps to control costs. Restricted assets. Contractual agreements or legal requirements. Examples: customer deposits of utilities, assets set aside for repayment of revenue bond principal, reserves for maintenance of plant, funding of depreciation. Liabilities to be paid from restricted should be reported separately from liabilities to be paid from unrestricted assets. Enterprise fund basis of accounting. Enterprise funds are accounted for on a full accrual basis of accounting. The accounting for the enterprise fund is the same as a for-profit business. Government funds are accounted for on a modified accrual basis of accounting. The argument in favor of using the full accrual basis is to account for enterprise funds, including the following. The full accrual basis of accounting is a measurement that focuses upon all economic resources, capture all resources and obligations, including capital assets and long-term obligations that are associated with the activities, provide a more complete picture of the entity's fiscal status and operating results. The argument in favor of using the full accrual basis, the measurement focus on all economic resources, is more consistent with GASB's objectives that financial reporting should provide information to determine whether current year revenues were sufficient to pay for current year services and to assist users in assessing service, effort, costs, and accomplishments. The arguments in favor of using The arguments against using the full accrual basis to account for enterprise funds are two separate measurement focuses and bases for accounting within the same set of financial statements are confusing, limits the usefulness of entity-wide consolidated statements that purpose to present an overview of the entity as an economic whole. Another argument against is the full accrual basis to account for enterprise funds. There are no clear-cut distinctions between business and non-business activities, and despite many similarities, government activities cannot be compared to activities carried out in the private sector. The activities should be assessed by criteria other than profits, which drives for-profit businesses. Statement of cash flows. Statement of cash flows must be prepared using the direct method. Governments, unlike businesses, cannot use the indirect method. Statement of cash flows must clarify transactions in 4 categories rather than 3 required of businesses, which are cash flows from operating activities, cash flows from non-capital financing activities, cash flows from capital and related financing activities, cash flows from investing activities. Interest expense is found in the cash flows from capital and related financing activities or cash flows from non-capital financing activities section. Cash flows from non-capital financing activities, cash receipts from state appropriations, cash proceeds from short-term and long-term borrowings other than to acquire, construct, and improve capital assets, cash receipts from grants and voluntary non-exchange transactions or gifts, not used for capital assets or for specific activities considered to be operating activities of the grantor. Cash received from other funds except amounts used for capital assets, quasi-external operating transactions, transactions that are external from government transactions such as revenues or expenses, reimbursement for operating activities, cash received from property and other taxes not specifically restricted for capital purposes. Interest expense is found in the cash flow from capital and related financing activities or the non-capital financing activities of the government statement of cash flows. Interest expense for a for-profit business is located in operating expenses of the statement of cash flows. Cash flows from capital and related financing activities, cash payments for principal and interest on borrowings for the purposes other than to acquire, construct, and improve capital assets. Grant payments to other governments or organizations not considered as operating activities of the grantor. Cash paid to other funds except for quasi-external operating transactions. Quasi-external operating transactions are transactions that are external from government transactions such as revenues or expenditures. Enterprise funds as a business. Governments account for the businesses in an enterprise fund. The reported expenses and any additional liability on the proportion of the business used during the day. The total revenue, reported expense, and associated liabilities are recognized when transactions are completed. Government fund. Reported expenditures would be only that portion of the cost requiring the use of currently available financial resources. The balance of any cost will be reported as a liability on the government-wide statements of net assets, and statement of activities, which are on a full accrual basis in the schedule of long-term obligations. Internal service funds are used to account for government units or agencies on a cost reimbursement basis. Examples of activities accounted for in internal service fund include data processing services, supplies, vehicle repairs, services, self-insurance. Government may also account for those services in its general fund, general operating fund. There are no requirements that specific activities be accounted for in internal service fund. Internal service funds are expected to establish their billing rates to ensure that their costs are fully reimbursed. There are no guidelines or accounting principles of cost. Because the revenues of internal service are also expenditures of the general fund, both revenues and expenditures from the internal service and the general fund need to be offset by costs and revenues. Insurance. The essence of insurance is the transfer of risk to an independent party. When the government self-insures, it does not necessarily mean they are insured. Self-insurance means the government accepts the risk itself. Even if the government accounts for its self-insurance and internal service fund, the government as a whole, which is ultimately responsible for any losses, any payments from the general fund to the internal service are in effect internal transfers rather than the expenditures. From the perspective of the government, the only true expenditure are those which are incurred when a loss is incurred and the government has to pay the claim. Service concession agreements are long-term arrangements in which a government contracts with a private sector entity or another government to operate a major capital asset such as toll roads, hospitals, student housing, airports, telecommunication networks. The government transfers to the contracted party the rights and related obligation to provide services through the useful use of infrastructure or other public assets. In exchange, the government receives from the other party an upfront payment or a series of payments over a period of time. Governments enter into these agreements because in a period of declining revenues and other fiscal constraints, they provide quick source of cash. These agreements are the equivalent of borrowing transactions. Enterprise funds are classified as business type activities, whereas internal service funds are classified as government funds. Any assets and liabilities of the internal service funds are not eliminated in the consolidation process and are included in the column for governmental activities. The expenses of the internal service funds are charged back to the funds to which the internal service fund provided services. The rationale for the chargebacks from the internal service fund is that the fund provides services to the governmental funds, whereas the enterprise funds are external to the government. However, if the internal service fund provides services mainly to enterprise funds, then the balances that are not eliminated in the consolidation process should be reported as business type activities. Proprietary fund restrictions. The most common restrictions to which proprietary funds arise with revenue bond covenants. Revenue bond covenant serves as guarantees to protect the bondholders in case of defaults of principal of interest payments. These may require that the government use bond proceeds for specific projects or that it set aside resources to service the bonds. Restricted assets are offsets by liabilities, and they should be offset by a designation of net assets. For example, if a government has unspent bond proceeds that must be used for a specific purpose, those resources would be offset by bonds payable. They should not be offset by an additional restriction of net assets. To do so would be offsetting the restricted resources twice. Chapter 11. Issues of reporting, disclosure, and financial analysis. Converting governmental fund statements to government-wide statements. Start with a year-end trial balance that combines all governmental funds. Then eliminate interfund transactions. Numerous transactions were made in the governmental funds. Transfers such as general fund to debt service, payments for services from internal service fund, self-insurance activities all need to be blacked out. Interfund payables and receivables must be eliminated. Adjust capital asset related accounts are to be reported on government-wide statements but not on the fund statements. Government-wide statements which are statement of net assets, statement activities, must be added to the trial balance offset by additions to net assets. Eliminate the expenditure of new assets. Also, adjust long-term debt and debt-related accounts, such as long-term obligations are reported on government-wide statements, but not the fund statements. Entries similar to those for capital assets must be made. Entries must be made to eliminate the proceeds from the issuance of bonds. Bond proceeds are added to long-term liabilities. Adjust for difference in basis of accounting. Governmental funds are accounted for on a modified accrual basis. Government-wide statements are prepared on a full accrual basis. There are revenue expenditure timing differences. Government fund statements, but not government-wide statements. Revenue must satisfy the available criteria for recognition. Consolidation, consolidate the internal service fund. Internal service fund is classified as a proprietary fund. They are accounted for in governmental funds. In the government-wide statements, their assets and liabilities are divided between governmental and business type activities. Any profits or losses occurred during the year are charged or credited back to the category of funds from which they originated. Adjustments of net assets. Two main adjustments are likely to be the addition of capital assets and long-term obligations. One, the addition of depreciation expense, which is gains and losses from the sale of capital assets, deletion of amounts spent to acquire capital assets, the proceeds from the sale of capital assets, or the deletion of long-term debt proceeds, which is amounts spent to repay long-term debts, addition of any gain or loss on the retirement of debt, the amortization of any debt premium or discount. GASB Statement Number 34, the financial reporting entity, sets forth the criteria for determining the units that should be included in a reporting entity and how they should be reported. Key criteria is financial accountability. The primary government either appoints a voting majority of the unit's governing body, or a majority of the unit's governing body is composed of primary government officials. The primary government is able to impose its will upon the potential component unit. There is a potential for the organization to provide specific financial benefits or financial burdens on the primary government. Reporting entity. Why is a reporting entity an issue? An organization's legal entity may differ from its economic entity. Composition of a reporting entity includes primarily government, any state government, general purpose local governments, special purpose state or local governments, component units. Special purpose governments must have a separately elected governing body, be legally separate from other primary governments, be fiscally independent of other governments, have authority to determine its budget, levy taxes, and issue bonds. A component unit is legally separate government for which elected officials of primary government are financially accountable. Joint ventures are where governments enter into agreements with other governments. Is a contractual agreement with one government to another government. Legally is two or more participants agreeing to carry out a common activity, with each part taking both the risks and the rewards, such as airports, bus terminals, tunnels, bridges, seaports. Joint ventures presuppose that both participants have an equity interest. If the government made the investment from a governmental fund, then it would report it as it does other long-lived assets. Because governmental funds are accounted for on a modified accrual basis, it would not record the investment in the fund itself, but only in the schedule of capital assets. It would recognize revenue in governmental fund based on their criteria. If recognized in the government-wide statements, then investment would be recognized on the accrual method. Related organization. Statement number 14 defines a related organization as an entity that satisfies the criterion of financial accountability. Primary government appoints a voting majority of its governing board. Primary government cannot impose its will on the organization. There is no potential for the organization to provide specific financial burdens upon the primary government. Example, transit authority. Governing board has the power and authority to levy taxes, authorize the issue of debt, set fees, adopt its own budget. Organizations with special ties to the reporting entity, also known as affiliated organizations closely tied to entities other than component units and related organizations. Primary government does not appoint a majority of their governing boards, and they are not fiscally dependent on the primary government. Many of these organizations' qualities exempt under IRC 501c3. Their purpose is to provide financial assistance to the government they are associated with, such as state university alumni, public school teacher parent, government, hospital fundraising foundation. GASB Statement Number 34. Specifically, the primary government is able to impose its will upon the potential component unit, or if it satisfies any of the following criteria, which are: it can remove appointed members of the potential component unit's governing board. It has authority to modify or approve the unit's budget. It can approve or modify the unit's fee charges, can veto, overrule, or modify decisions of units governing. It sets forth the criteria for determining the units that should be included in a reporting entity and how they should be recorded. Specifically, the primary government is able to impose its will upon the potential component unit, or if it satisfies any of the criteria, it can remove The component unit is able to provide specific financial benefits to, or to impose specific financial burdens on the primary government if the primary government is entitled to the potential component unit's resources, is legally obligated for, or has assumed the obligation to finance the unit's deficits, or otherwise obligated to support the unit's operation, is obligated in some manner for the unit's debts, whether obligation is expressed or implied. Discrete presentation versus blending presentation. Discrete presentation is when one or more component units are reported in separate columns in addition to those pertaining to the primary government. Discrete presentation versus blending presentation. Discrete presentation is when one or more component units are reported in separate columns in addition to those pertaining to the primary government. Blending is when the component units, transactions, and balances are reported as if they were part of the primary government. The component units' funds are accounted just as they were funds of the primary government. Blending is required when the primary government and components used are controlled by governing boards that have the same members, or the component unit provides services solely to the primary government. Those conditions are not satisfied, then discrete presentation is required. Comprehensive annual financial report. The three main sections of the comprehensive annual financial report are the introductory, financial, and statistical sections. The main components of the financial statements are the auditor's report, management discussion and analysis, basic financial statements, required supplementary information other than combining statements and schedules. GASB Statement 34 incorporates into the required management discussion and analysis some of the information once included only in the letter of transmittal. Letter of transmittal remains one of the most informative sections of the CAFR. The letter has four main sections to it: formal transmittal of the CAFR, governmental profile, information on economic conditions and awards and acknowledgments. Formal transmittal of the CAFR, legal requirements that the CAFR is intended to meet and indicates management report responsibility for CAFR contents. Government profile, information on economic conditions, which are key economic and financial issues facing the government, describes local economy and prognosis of the future, any major fiscal related initiatives, long-term and short-term financial plans and policies. Management discussion and analysis. MD&A key types of information that must be included: a brief description of the required financial statements, condensed financial information derived from government-wide statements, analysis of the government's overall financial position and results of operations, including impact of economic factors, analysis of balances and transactions of individual funds. MD&A key types of information that must be included: analysis of differences between original and final budget amounts and between actual and budget amounts, a description of changes in capital assets and long-term debt during the year, a discussion of the condition of infrastructure assets, a description of currently known facts, decisions, or conditions that have or expected to have a material effect on financial position or results from operation. Combining of statements. Combining of statements provide the details of non-major funds, one column for each of the funds. The total columns of the combining statements tie into the amount reported in the non-major funds column of the fund statements. Combining statements of non-major funds are not required by statement number 34. They may be presented as supplementary information. Internal service funds. Internal service funds are presented in propriety fund statements in a single column that combines all of the government's funds of that type. They do not have to be separately reported in the basic fund statements, even if they would otherwise meet the criteria for classification as major funds. It is appropriate that the internal service funds be reported upon in the combining statements. Examples of items in management discussion and analysis: a brief description of the required financial statements, condensed financial information derived from government-wide statements, an analysis of the government's overall financial condition and results of operation, including impact of important economic factors, analysis of balances and transactions of individual funds. Examples: an analysis of differences between original and final budget amounts and between actual and budget amounts, a description of changes in capital assets and long-term debt during the year, a discussion of the condition of infrastructure assets, description of currently known facts, decisions, or conditions that have or are expected to have a material effect on the financial position or results of operation. Statistical information. Financial trends are components of net invested in capital assets, net of related debt, restricted and unrestricted. Changes in net, including expenses, general revenues, and programmatic revenues. Revenue capacity. Revenue levies and collections value of property by category, which are residential, commercial, tax exempt, and the 10 largest taxpayers. Debt capacity ratios of debt by category: general obligation, revenue, leases, loan certificates of participation. Amount of overlapping debt, details of debt limitation, details of debt that is backed by pledged revenues. Demographic and economic population, total and per capita personal income, unemployment rate, largest employers, including the number of employees and percentage of total employment that each represents. Operating, which is number of employees by program or function, indicators of demand or level of service by function. Police activities that include number of reported crimes, number of reported arrests, responses to 911 calls. Volume, usage, and nature of capital assets by function. For example, a motor vehicle pool. This might include the number of vehicles by type, mileage, and percentage of fleet in service. Date on pension and post-employment payment plans. Fiscal strength. Fiscal strength of a government cannot be addressed merely by examining its general fund. General fund surpluses can be offset by deficits in other funds. General fund surpluses are not by themselves a guarantee of fiscal strength. General fund surplus is a residual amount dependent on the composition of the government's assets and liabilities. Analysis must consider to the extent to which the individual assets and liabilities contribute to or detract from the overall fiscal strength. Financial analysis are concerned with whether a government will be able to satisfy its obligations and provide the services required of it, and how the government plans to raise revenues and allocate resources to which the plans are realistic. and will have an obvious impact on whether it will be able to satisfy its obligations and provide the services required of it. Fiscal capacity. Fiscal capacity is an economic base that the government can draw upon for its resources. Fiscal effort is often measured by comparing a government's revenue from its own resources with either a measure of income, median family income, or total value of property. Taken together, the two provide quantifiable information about the financial resources that are available to the government to satisfy demands for increased services or to meet emergency funding. Assessing fiscal effort. Government's fiscal effort. The extent to which it is taking advantage of its fiscal activity may be measured by comparing the revenue it generates from its own sources. Income can be captured by measures such as median family income or total appraised market value of property. Fiscal effort equals per capita resources from own sources over median family income, or revenue from own sources over total appraised value of property.